Guys, this week's weekly roundup, 29th of October to the 2nd of November. Good news only this week. Guys, welcome to the weekly roundup, and I'm pleased to report a fantastic fund performance for us. 4.75% in October, giving us a year to date of 45.215%. It's an excellent result for us and setting us up nicely for November to take us over that 50% mark before we close up our books for the year for the end of the year, probably the end of the first week, maybe the 9th, 10th of December, something like that. Also pleased to report, first 2 days of November, we've managed to close a 1.05% profit. Now that's unusual for us because the first 2 days, Thursday, Friday of last week, led up to non-farm payroll. And we tend to stay out of the markets, but we saw opportunity, we took profit off the table. I'm going to show you how I did that with the winning trades and also the learning trades that I'm going to run through a little later on. So 45% up and definitely on target to do our budget at 50%. Clients happy, we're happy, everybody's making money, everybody's happy. So that's really what it's all about. So I'm going just as well to talk about our winning trades. I'm going to share that with you now. And this week we're going to be focusing on our pound, yen, blue tiger Fibonacci trade. Let's have a look at that now. So here we are doing a very quick analysis of our winning trade last week. One of our winning trades, and it's a pound yen pair. Now you'll see this is our very basic blue tiger Fibonacci trade. We use standard Fibonacci retracement, and you can see we've started at the bottom here and we finished at the top. That's our Fibonacci, and we've waited for retracement down to blue here, which is entry. Red is our stop loss, and you can see we've taken 2%. Now, the reason I picked this trade to share with you is that we took profit at actually just a fraction below 2%. Normally we aim for 3%. But sometimes you've got to look at where you're at in your trading cycle, where you're at with your figures, where you're at in the week. I prefer to close out our book on a Friday if we can, especially last week as it was non-farm payroll, and you never know what's going to happen during non-farm payroll. The reality was very little happened this time. There was very little volatility despite the figures being considerably better than forecast. But I like to be out, so I'm looking at this on Friday. I've got 2% on the table and I take it, as well as two other trades. So collectively we took about 4.05 or 4.1% off the table last Friday. We're closed out of our trades ahead of the weekend. Why do I like doing that? A, gives us certainty. We've got profit, we've banked profit, and as an old business colleague of mine used to say, your first sale is your best sale. You know, we've got 2% there. Sometimes I want to take that because I don't know what we're going into at the weekend. The nuclear war could start with Korea at the weekend, right? We don't know. So because of that, because the markets are closed, and because there's going to be a gap, I like to be out. Then we know what we're dealing with on Monday morning. So I'm sharing this with you because A, it's a very simple strategy, it's not very time consuming. One of the strategies that we teach at the Advanced Trading Academy, but also to take profit when you can at the right time, okay? Now, it's not breaking the rules, it's boxing clever and making sure that you are banking those profits. Make sense? I think it does. Makes sense. Close your trades before the weekend so that you know you've banked profit. If you're in a loss, sit with it. There's nothing you can do but bank those profits ahead of the weekend, and that's why I'm sharing our pound yen winning trade from last week. Thanks for watching, guys. Okay, now we're going to have a look at our lesson for the week, and we're looking at two trades here: Euro Aussie dollar and Aussie dollar Japanese yen. Let's have a look at that now. Guys, this is our learning trade. There's actually two trades this week, and what I want to highlight to you is the potential danger of being in the same base pair in two trades. So what we've got here is Euro Aussie dollar and Aussie dollar Japanese yen. So and the first pair, euro being the base pair, Aussie dollar, and then the second one, Aussie dollar being the base pair. But in this situation, we were both short on Aussie dollar, Japanese yen, and we were long on euro, Aussie dollar. So drawing your attention to this, because you'd expect if we had a strengthening of Aussie dollar that they're going to move in opposite directions. And that's exactly what happened, which took us out of both trades. Now equally, it could have gone the other way and they both moved in the right direction and given us 6% profit. So I'm just highlighting the dangers of being in matching pairs, multiple trades in matching pairs. You could be in pound USD or euro USD at the same time. If you have a weakening of the US dollar, it could cost you. If you have a strengthening of the US dollar, it could make you profits, right? Same with the Aussie dollar pairs, same particularly for the yen pairs. There have been times where we've been in 3 yen trades and been taken out in a heartbeat. 3 trades all in one. So the lesson for this week is just be aware, particularly if you're in a couple of similar trades that have the same currency in it. Be super aware of high impact news and make sure you're managing those trades specifically. You can see here both of them were losing trades for us. That cost us 2% last week. Fortunately, we made another 4% and we were actually able to show a 2% trade for the week. So all good at the end of the day, but we need to learn from these situations. Guys, some great learnings there. I hope that you've taken something away from that. You've seen how simple that Blue Tiger Fibonacci trade is, and the results we're getting from that strategy are quite simply fantastic, especially when you look at the level of work and input that we have to put into it. Very, very little. It's a really nice strategy. It's very consistent. It's not time consuming. Our learning trades just shows you, if you're in a pair that's got the same currency in it, it can take you out in a heartbeat. You need to be aware of that, and that's what happened to us last week. So I hope you've learned something from that. Something to watch out for this coming week. There's not that much red economic data, high impact data coming, but tomorrow is midterms in the US. Okay, so they're going to the polls, it's congressional voting, and it could swing. It could swing between the Republicans and the Democrats. We don't know where it's going to go. There's always predictions, but you never know. It could have quite an impact on the US dollar-based currencies. So we'll stay out of the market. Simple as that. Until well into Wednesday, when we know what the results are and we've seen the impact and there's been that market adjustment. We'll let it settle down on the US dollar pairs. So watch out for the US midterms. Guys, thanks for watching. I hope you've taken something away from this week's weekly summary. Make sure you subscribe to our YouTube channel and give us a big thumbs up on Facebook and Instagram. Thanks for watching.